What's going on, my friends, entrepreneurs, small business owners, and side hustlers everywhere? We've got another amazing guested podcast for you on the Seven Figures Club to help you get into the 5% of entrepreneurs and business owners who run seven-figure businesses. And we've got someone today who's very familiar with 7, 8, even 9-figure projects. And we are very grateful to have Dr. Vikram Raya. And Dr. Raya, very impressive, is a medical professional and knows exactly what it's like, as entrepreneurs to work long, hard hours, make sacrifices. Of course, we have a lot of medical professionals in the audience, doctors who we've gotten funding for over the years and working with Dr. Kogan. And so you guys are going to want to pay attention today because Dr. Vikram and his team are very good at helping entrepreneurs, small business owners, and medical professionals to create more freedom for themselves and their families. And he does it through multifamily real estate investments, which allow you as an investor to create passive income and build wealth for your families, all while making a difference in local communities. Dr. Vikram is one of the owners of Viking Capital, where their mission is to help other hardworking medical professionals and entrepreneurs to achieve the freedom that you guys want and deserve and create the life you've always wanted to live. Dr. Raya, welcome to the podcast.
There are over 32 million businesses in the U.S., and over 90% of them will never break 7 figures in annual sales. So how do we as entrepreneurs or aspiring entrepreneurs break into that 7 figures club? This podcast will relentlessly share the secrets, strategies, and tactics I've used to create 3 multi-7 figures businesses and bring in even more successful entrepreneurs than me to share their inspirational stories and tactics to success. You can create your dream business and life right now. So buckle up and let's go.
Leo, that's awesome, man. Thanks for the intro. That was very kind of you. And please call me Vic, man, because I want to get down and dirty. We want to help. We want to get into it with your entrepreneurs. We want to get everyone to the 7-figure club because guess what? There's room for everybody up here.
Amen. There's always room at the top, my grandpa used to say. Well, Vic, tell us a little bit about your background. How did you get into entrepreneurship? You were going down this path to become a physician, a medical professional. You helped a lot of people. And then at some point, you got this itch and maybe even started out as a medical entrepreneur. I don't know, but just curious, how did you, kind of arrive at entrepreneurship as where you wanted your life to go?
I was just talking to another friend of mine. And we are just talking about sounds like you own and buy all these apartments, but dude, that's so different than what you're doing as a doctor. I'm like, the interesting thing is when I grew up, my parents came here from India when we were really young. And, my dad was an engineer and my mom worked odd jobs and retail. And then, so we lived in apartments, when we first got here and we until I think I was in high school, I was literally every 2 years, we go to a different apartment complex. And that's my life. I actually enjoyed it. I made friends there. We would hang out and it was sort of fun. And, but at some point we got some stability. We were able to, finally get a house. And, I had no clue in my mind that I would one day start owning these kind of things. And in fact, I had 6 people in my family who died of heart attacks, Leo. So I was like, dude, I need to figure this out because this is important. And in fact, at my son's first birthday, my dad collapsed in front of me and with a heart condition. And I was like, God, this is serious. And so I studied to go to be a doctor. And then I was the first one in my family. And then I ended up specializing in cardiology. And I was out in Milwaukee, probably in my last year of my fellowship. And I was like, all right, I need to, wrap this up so I can, achieve my dream, be that cardiologist I always wanted. And I thought as soon as I get that, all these flowers will fall from the sky and then, the clouds would part and I would hear this melodious music. But in fact, what I heard was doctors complaining about their life, struggling, meaning no one's going to feel sorry for a doctor making 200 to 400, 500K, but they were literally not seeing their family, working their tail off, sabotaging their own health, and sometimes doing things that were not kosher in terms of, following the guidelines, if you will. For sure. When I saw that, I was like, what in the heck? I thought this was my ideal, goal in life. And then So I made a declaration, Leo. I said, if I'm still practicing by the age of 40, meaning if all my income was just from medicine by the age of 40, something went terribly wrong. And I just made a declaration that I'm going to earn money in another way, and I'm going to practice for the love of the game, for my passion, for my patience, and because I really want to, not because I need to. And so I was like, all right, let's come up with a business. So I said, all right, what's my first hustle? I knew there's a lot of long-term care nursing homes who needed like doctors to moonlight and sort of take care of the people at night. I was like, all right, I found one, and then I had the idea that why don't I just get the contract and then get other doctors to work underneath me, and I'll take a little bit of piece off the top. So I created my own first staffing agency. I didn't even know what I was doing, and so that was my first business. It was successful. I ended up selling that contract to another doctor buddy of mine, and then he took it over. I was like, all right, that's pretty cool. And then I tried, then I got a little cocky. So I was like, oh, let me do options trading. I heard options is the way to become a millionaire. And so I did options trading, but I was smart enough. I was like, let me hire a coach. But what I found was like, it's a labor and time intensive thing. And you have to really understand it. And it's very nuanced. And I was about to graduate from fellowship, but like I was spending half my time trying to study options. And my program director was like, dude, you're going to fail if you don't do it. Focus on your patients. Don't worry about all that. So I let it go. I was like, this is too hard. So when I came back to DC with my wife and we're like, okay, we want to settle down. I was like, all right, I need to figure out a business that I can do on the side, that's simple, that is proven, that will stand the test of time. Obviously, we read the Kiyosaki books, just like everybody else out there. And real estate seemed to make sense. And so I started doing single family homes. And then in 2015, I heard a guy speak at one of my real estate investment clubs about multifamily and syndications and buying these 100 and 200 unit apartments. And at first I thought like, that sounds illegal, man. I don't know. Like, how is he doing that? And then I just dug into it more. I'm like, this makes sense. And so we started Viking Capital in 2015. And now fast forward like 7 years, I was just telling you, in the green room, we just made the Inc. 5000 list. We have $650 million of real estate. We've done almost like 5,000 deals all over, 5,000 units all over the country. And we're operating in 6 states. And then, at some point they say when your side hustle is better than your main hustle, you got to consider shifting. And I ended up doing the COVID crisis. What ended up a crisis actually became an opportunity for me. So I doubled down, focused on real estate. And I've also started mentoring and coaching doctors all over the country in how to do this as well.
That's fantastic. What a beautiful story. So you started out going down the medical school route, and then in between there, as you're, transitioning to become a full doctor, you actually, start a little staffing practice. You're hiring medical professionals, other doctors, you sell that. Try out options. It's a little bit more difficult, very nuanced, takes a lot of time, maybe higher risk. I would say definitely higher risk. And then eventually get into single families and then see this multifamily opportunity. And, there's a lot of different opportunities that people have had over the last decade. What is it that makes multifamily, in your experience? Well, you've got a lot of experience now with almost 5,000 units, 5,000 doors, and 600 million plus under your belt in terms of these multifamily projects. What are some of the benefits for our medical professionals, our entrepreneurs, small business owners, people who are looking for a place to park money, park capital, and do it safely and get a better return? Right now, obviously, we've got, the stock market taking a dip. We've got cryptocurrencies that have lost the bulk of their value. And so a lot of people are really searching, where can I make a return? Where can I put my money to work that's not going to lose money and earn a strong return? What is the case for multifamily, and why should that be a really important asset people should be considering?
Leo, let me ask you a question. What other asset class is basically, can you get a 25% return? And I'll explain how I arrived at that number, but it's essentially a cumulative, when I'm talking about tax efficiencies, distributions, and even profit at the tail end. If you put it all together and you annualize it out, meaning like years of investment and then total return divided over those years of investment, getting close to a 25% return, essentially, almost not guaranteed, but pretty sure, that's very hard to find. I mean, you can't stocks, mutual funds, bonds, crypto. Maybe it's a franchise, perhaps. Maybe owning your own. Maybe it's owning your own business, perhaps. I don't know, but it's difficult to find, and multifamily essentially provides that in an inflation resistant, recession resistant asset class that is not a luxury but a need. I don't care if there's COVID. I don't care if there's economic downturn. I don't care if China attacks another country. This will never go away. People need a place to live. Oh, but what happens if the market sucks? Okay, fine. So now homes are more expensive and people can't afford to get the mortgage. Okay, what'll they do? Rent. It's like, no. Oh, what if your apartment burns down? Great, I have insurance. Great, I actually will get more money maybe because the replacement value is, I'm buying under replacement value. Oh, but what happens when you go through all these what if scenarios, overall, if you buy right in the right states, right cities, if you will, with the growth, the demographic growth, the net migration, the positive household formation, and then you have a good management company. If you don't do mom and pop management, or let's save some money and be cheap management, but actually get, legitimately manage the property well, and you infuse money into it because you actually believe in it and you want to help the project, the community, and there's comps that can support these rent bumps you can achieve, then it's a sure bet, I would say. And really, I mean, I considered putting my wealth in many other areas. Not only am I an active investor in Viking, but I passively invest all over the country, other sponsors and syndicators, and it's done well. And you really have to mess up to lose money in multifamily.
Wow, just so true, so remarkable. Even though I asked that question, I completely agree with you. So the only other investments, obviously, if you invest into your business, but that means 50, 60, 70 hours a week of work for me as an entrepreneur, even when you have systems and people and you can make great returns with your business. But what we're talking about is the money that's sitting there, right? The money that's lost 20% in your 401k, the money that is losing 9% a year now sitting in your bank account because of inflation. And there's just no doubt about it that the best opportunities that I've seen out there are in multifamily. And I do have some investments in Airbnb properties that have done really well. But even those will take a decent amount of your time because Airbnb is short-term rental. There's a lot going on. I've got a property management firm. But the opportunity with Viking Capital is truly unique because people can come in and really hand off a lot of the to-do list, the tasks to Viking Capital. So how does that work? Let's say, I've got some capital or I want to move out of my 401k that's, now losing money, and maybe at best averages 7% returns. And I'm looking for a better return. I'm looking for the tax benefits of owning real estate, getting that depreciation. What's my responsibility, as a capital partner or investor when I hand, some capital off to Viking Capital?
Yeah. Thanks, Leo. So guys, if you're out there, you're earning some money either in your own company or you're a W-2 earner, obviously you have something in the market, and I respect that, and keep an eye on it. But if you have money that's not doing much, like in an IRA, as Leo's mentioning, that's how I got started. When I was working as a physician, I didn't have that much extra capital lying around. So, but I did have all this money that I've been thrown into 401ks from different companies. I've kept on rolling over into some random IRAs, and they wouldn't do anything. So they're in custodians such as Ameritrade or Charles Schwab, which are traditional IRAs. But you want to take that money and you want to find maybe there's Quest, there's Advanta IRA, there's New View, there's IRA Club, and there's these independent custodians, self-directed custodians that can take that money and be your custodian, but allow you to invest in alternative asset classes, such as multifamily real estate. And so now you have money that was not doing much, potentially losing or stagnant or flat, and now you're starting to turbocharge and grow very quickly. So you can invest in an asset like ours, which is multifamily, and there's a term called syndication, which is just a fancy word for a group of people investing their money together in a project. And so we raise capital from investors. We also put our own capital because we believe in what we're doing as well. So we have skin in the game. Our interests are aligned. We go through about 1,200 deals a year, Leo. all over the country, and we find
Wow.
6 that we eventually close on.
Wow.
So that's the kind of like due diligence you have to do. And I have a team in India that's doing a tremendous amount of underwrites. I have another team in Brazil that's doing some stuff. And then we have our underwriter that takes all of that, and then he feeds it to our main vice president of acquisitions, who then flies out, sees these properties. We put bids on them. If they make sense, then we go to the next level. Then we compete with other groups necessarily to win these things. Sometimes we get them off market because of relationships, but a lot of times they're through the process. And after we've vetted it fully, we have an investment committee in our own company, because we have our company's grown now in size. And so that investment committee then red teams it, meaning challenges it, comes up with assumptions. Hey, what if this happens? What if this happens? What if this happens? All the same questions our sophisticated investors will probably want to ask us. We're already doing ahead of time. Then when we win the deal, we create the packet, we get everything ready. We educate our investors first, because without education, I don't want people to take action. So once they feel comfortable, then we want them to move forward, because we think this is a good bet. Look, in commercial real estate, there's a bunch of different categories. There's office, there's retail, there's hospitality, there's industrial, self-storage, and multifamily. There's only 2 things that did really well during the pandemic, like really, really well. And I would say that's multifamily and industrial. Why? Well, everyone needs a place to live, and there's a shortage. They're not building enough houses or enough apartments out there compared to the amount of need. And number 2, because of everyone ordering everything on Amazon, there's all this warehouse space that's needed. And so, no one's going to the stores anymore. Everyone's buying everything online. So industrial is blowing up as well. So logically, you can understand why it would make sense to invest in those 2 categories. And so what we do is, once we identify a project, we share with our investors. There's like a webinar of some sort. They get excited, they get interested. Then they ask questions to our investment team. And once the people feel comfortable, then it's a simple process. They invest, whether it's their IRA investing or their cash investing. And they go through a portal. We have everything encrypted, secure. And then once they're in, here's the kind of returns they can expect. Either we have 3 levels of returns we give. We have like a straight class A, which we call a 10% return. It's for people who want cash flow. They love cash flow. So we're giving a straight 10%. Then there's a class B that loves cash flow and appreciation. So they'll get 7%, and then they get a 70-30 split with us. So they get the 70, we get the 30. So that means on average, if you had to think about it, it's about a 1.8 to about a 2x multiple there for them. And then finally, there's some people who have 7 figures to invest. And so we have something called Viking Reserve for them. And so they get an 8% return. And on top of that, they get an 80-20 split, literally the best we can ever give to anybody. Wow. And those people get close to a 2.2x return. And so, you can mix and match, you can choose one, whatever makes sense for you. And again, it may seem intimidating, but our minimum investment is only $50K. So it's really approachable to come into as your maybe first investment. And our goal is to create long-term relationships with you. So, you get on top of all that, let's say you invest $100,000 in one of our deals. At the end of year 1, I'll give you a tax write-off about $90,000. And that's what we call bonus depreciation. And we do that through something called cost segregation. So essentially, we're finding all the different things on the property, the equipment, the material, the roofs, and we're able to depreciate all that down. And there's this tax savings that we can provide you. And this passive paper loss shows up on your K1 and it offsets any other passive gain you may have had from a company, from stocks, from real estate. And that's why people love it. So some people don't even care if we even make money in the real estate. They're like, dude, just give me those losses because I'm making money somewhere else. I need to offset that. So anyway, that's how it works. It's as simple as you can get. And I know people are going to have a lot of questions and I'd love to answer them, but that's sort of just the process though.
Vic, it's just so exciting. I just love this stuff. I mean, because I've been doing entrepreneurship for 2 decades. I've looked at all the different investment opportunities out there. And this literally is, I feel like, the best investment over the next decade. And let's start at the top. The number one factor I think that you brought up, which is super important. And for a lot of the audience, they don't know this. But what happened in the recession of 08 and 09, before that, every decade, from like 1980 to 90, 1990 to 2000, 2000 to 2010, there were millions of properties. I think it was maybe 10 million homes every decade were being built, something like that. Does that sound right?
Yeah, I think exactly. Yeah.
But the deal is what happened after the recession of 0809 from 2010 to 2020, they didn't build. People lost money, they were scared, they didn't build. And so we're literally, according to realtor.com, not one, not two, not three, but 5 million single family homes short in this country. Like we're 5 million housing units short for families to have a place to live. And that creates a lack of supply. And the simple supply and demand tells us that demand is going to continue to outpace supply because of that. And now let's say, you raise interest rates now and home values have gone up so much, less people are going to be able to buy homes, especially in hyper growth areas. So now what are they going to do? Well, they've got to rent, and they want to rent something nice. So tell us what your guys' strategy are with Viking Capital to where you're able to, create a very attractive multifamily. Is it kind of a value add strategy where you're making improvements, or what are some of the strategies that make the way Viking Capital attacks multifamily, more advantageous than other opportunities out there?
So I think it's all about understanding the landscape. So I think you laid out, Leo, the shortage issue and the supply and demand issue. There's another issue is also the pandemic has shown us that we don't need to live in a big metropolitan city to work. Though the pandemic is on its way down and hopefully it's wrapping up here, a lot of things have gone back to normal. People are traveling. I was in Italy a month ago where we had so many American tourists out there. So people have money even though there's a recession going on. Number two, on top of that, there's a movement outside the big hubs. So like people are going outside of California for sure, specifically like the SFs and the LAs of the world. They're leaving New York's, they're leaving Boston's and Chicago's. And where are they going? Well, if they're on the West Coast, they're probably going to Salt Lake City or they're going to Phoenix. And that's why those markets have exploded. If they're on the East Coast, they're going to Atlanta. They're going to maybe the Carolinas. They're going to Florida. And that's why those markets have exploded. If they're in the Midwest, they're probably going to Texas, right? So I don't care what your political affiliation is, but I highly suggest you buy in red states. Okay. And then
definitely agree with that.
Yeah. So at least for real estate purposes, and then number two is, okay, if there's net migration, there's household formation, there's employment growth, and there's a shortage of units already, then it's a no-brainer. These are the areas you want to go. So there's already an organic propulsion already. On top of that, we do something called value add. So we're buying assets that already have some kind of problem that we can fix. Perhaps it's operational issues. Perhaps it's maybe their leasing is not up to par. Perhaps it's they've now infused any capital, and so all the surrounding apartments have really improved, and this hasn't. So they can't demand the rents that the surrounding market can ask for. So we go in, solve these issues, and what happens is that creates something called forced appreciation. We're forcing the appreciation of these properties because we're infusing capital. We're not hoping and praying for appreciation. We're making it happen because we're giving them a value, and then in exchange they're giving us a bonus in rents or a premium in rents. And on top of that, we're doing in areas that are already growing. Even if we do nothing, they're growing. So for example, we bought 2 deals recently, one in Houston, one in San Antonio. We just bought them like 2 or 3 months ago. We haven't touched them at all. And already they've gone like about $100 more than what we bought them for in terms of per month rent, And so that's, it's crazy. It's like, these are the kind of markets you want to buy in. And then obviously we're going to do our business plan for them. So we have these 2 strategies that's going to really do that. And then, so Viking Capital, when we got started, we're just like everyone else. We want to get in the game. And so we start with C-class properties. And I want to share with your listeners, Leo, the tiers of assets that you can buy in multifamily. You got D properties. These are the war zones. These are where like you don't feel comfortable like walking down, the street because something's going to happen to you. Then there's the C-class properties. This is blue collar workforce housing. It's a good class of assets, and you can get a lot of cash flow out of them, but sometimes they don't appreciate as much. And in good economies are great, but in economic cycles where it's a little more challenging, they're the first ones to lose their jobs. So you have to be very careful. Class B is sort of the best. It's a gray, white collar, good areas. They have at least 6 months of savings. And so 1 month of not having a job is not a big deal. They can handle it. So that's our bread and butter. We love B class properties and we like to convert them into A's. Then there's the A's, and we like those too because they're called renting by choice. They probably could afford to buy a home. Either it's just too tough to find a home that they like. They don't want to because they're downsizing because they're older, or maybe they're about to buy a home, but this is just the next step until they buy their home. Whatever the case is, they're renting by choice. So they want the luxury, they want the amenities, they want the upgrades. And if we provide that, they're willing to pay more rent. So we like these two, and these two classes are resilient during any kind of economic cycle. And so that's why we like to focus on them now as we've evolved our company.
So awesome. Something interesting that I think sets Viking Capital apart from the others, and maybe I think this is definitely part of your success. There are other groups out there that are doing a good job with multifamily and value adds, and they're getting great returns. And again, just further proof why multifamily is, in my opinion, going to be the number one place to put your money for the next decade if you want to, beat the market and get great returns and double your money, faster than anywhere else. But something you guys are doing is you've got some geniuses in India and Brazil that are out there, doing all the manual searches to find those deals. And I think that's giving you an advantage where you're seeing more opportunities and you're able to look at more deals. Whereas, maybe if it's just a regular company, there's a lot of work to do that. And because you can do it more affordably, you're able to see more deals and find more gold in the hills, maybe, than some of the other groups out there. And that's fascinating. You're saying you look at, on average, I think you said 1,200 deals a year, and condense that down to the top 6, which really puts the odds in your favor, I think.
Yeah, and the other cool thing, Leo, I like to do is we really believe in win-win-win, and I know you do with Seven Figure Club and all the other things you're doing. So, look, the brokers who work with us win. The lenders are happy because we do what we say we're going to do, and we're going to close. The tenants are going to get benefits because we're coming in, we're improving the community. We're going to rebadge the property. We have our brand is called Elevate, so it's Elevate at whatever the name of the new property we call it. We have a tenant wellness package where, as a doctor, I can't get that out of my system. So I'm figuring out how to help these guys. So we have like Wellness Wednesdays. We got like healthy food trucks coming by. We got CPR classes for these guys. They don't want to leave. They want to stay with us, and they want to continue to, be involved in our apartments and our communities. And now we're starting to get a reputation in the community out there. Like, oh, that's an Elevate property. Oh, okay. It's really well taken. I would love to buy that from them because I know it's a well taken care of property. And so building the brand, building the, that image for your company, having good relationships, making sure you have a good taste on your mouth after you interact with the seller, the broker, the buyers, all these people. So, business, Leo, is all about relationships. And I think you've built, a tremendous amount of relationships and that's why you're serving the community, you're serving your Facebook groups, you're serving all the people with your podcast and with your company. But I really think that this virtuous upward cycle of trying to, improve everything you're touching, it really comes back to you.
Yeah, and no question, guys. And you can put together these win-win-win situations. And at the end of the day, it's meaningful work and meaningful relationships, taking, some words out of Ray Dalio's mouth that really matter at the end of the day. What's the time frame typically with a Viking Capital project? Yeah,
great question. So we like to tell our investors, hey, this is a 3 to 5 year hold usually. But we've taken 9 deals out of the 27 deals we've done, Leo. We've taken 9 full cycle when we bought it, managed it, executed our business plan, sold it, given our investors not only their capital back, all their profits back, and then moved on. And the cool thing about that is we've actually looked at the statistics. We've had a 24.8% average annual return for our investors, and the average hold period was about 3.2 years. Wow. So we try to promise 5, but sometimes, we end up
the market's good
sooner because the market's really good. And, sometimes there's an offer.
Or you guys just did a good job. You just built so much value in the property. Like what these guys will do, Viking Capital will get a deal where a management company maybe is not taking as good care of it. They'll make some improvements to each of the units. They'll be able to increase the rent significantly. And by doing that, you guys that makes the property worth a lot more because now the rents are higher. They're getting cash flow each month on the higher rents, and because they got a good deal on it. And now the property's worth significantly more. So you put, let's say, for example, and again, there are different guidelines. We're not trying to sell this in terms of whatever all the guidelines and disclosures are, and you have to be usually what's the word, accredited investor, et cetera, et cetera. But keeping all that aside, let's say theoretically I put $100,000 in, and in just over 3 years, basically the Viking is turning that 100,000 into like 174, 75,000. Is that Absolutely. Right? And that's unbelievable, guys. That means the money is doubling every 4 to 5 years. And your old 401k or IRA, at 7% is probably taking a decade if your fees aren't that high, but your fees might be cutting out another 30% of the so-called 7% returns. And then you have a year like this where you might lose 20 to 25%.
Plus
the take that
the
much
tax
more to get
breaks.
in.
Oh my god, 24.8% doesn't even take down the tax breaks too.
Let's look at the 4 ways you make money with multifamily. Number 1, you've got monthly cash flow, right? Number 2, the property is increasing in value. There's appreciation. Number 3, Vic just told us, is huge. You can eliminate a lot of your taxes. Like they get to depreciate this
legally
property.
You can eliminate taxes, and essentially, look, you can't get rid of them completely. What happens is you essentially keep delaying it, and you can do it several ways. Like, let's say at the end of we sell a property, we can get all the investors, whoever's interested, to 1031 that into another deal and pay 0 taxes, and then roll over the profits and their capital, and then we could do it again and again and again. And essentially, maybe 10 years down the road, I'm ready to buy my yacht, I'm ready to go to my island. Okay, now you can cash out, pay some taxes, and obviously there'll be some taxes. But man, imagine growing all that tax-free for all those years and then choose to pay taxes. And you can do that the other way, where if you keep reinvesting and then you get these losses, you can harvest those losses to offset the gains you may have had. So there's what we call a lazy man's 1031, and then there's like the traditional 1031. There's also growing tax-free with the self-directed IRA. And I'm proud of our track record, but I'm really proud of another fact. Warren Buffett says rule number 1, don't lose money. Well, guess what? I don't think we're geniuses. I think we're good. I think we work hard. I think we're smart. But I think multifamily, as the asset class itself, lends itself to be following Warren Buffett's rule: don't lose money. So capital preservation is pretty intact using multifamily. That's why I love it. I'm a cardiologist. I stress test people for a living. I'm risk averse. So when I'm all into multifamily, it's because there's very little downside and there's a tremendous amount of upside. And as Ray Dalio talks about, asymmetric risk return, that's exactly what we're doing here.
Yes. Amazing. Well, at this point, Vic, if people haven't put 2 and 2 together, and I think 99.9% of them have, they're thinking, Vic, what's the next step? How can I learn more? How can I be a part of this amazing opportunity? And for my vantage point, it's passive money, right? It's passive money, passive returns, without you having to do all of the work and headache and be a property manager and go through all of the work and research, and then get everything presented to you in a nice, easy to understand format and in a webinar that they explain each one of these projects. What's the next step? Everyone's thinking, how can I, connect up with Viking Capital and be a part of some of these projects and have a chance the next decade to win, where there aren't, I think this is going to by far outpace every other opportunity out there.
Yeah, I think the best way to understand is, okay, let's say I get involved. What does that look like? Well, 1, we'll welcome you into the Viking family. Number 2, you're going to have like your own secure investor portal where you get to monitor your progress. Number 3, you're going to get monthly updates on what's going on. Number 4, guess what? You're gonna get monthly checks. We call it mailbox money, because you're gonna get these distributions coming in. End of the year, you'll get a K1, hopefully with some passive losses that you can use to offset some of the income. And then you have we have a hotline for all our investors. Again, we're trying to give a white glove service to our investors, because we want to treat them like gold, because that's what they are to us. We respect them, we value them, and we want them to continue to invest with us. So this is what you can expect from us. how do you get involved? Well, right now we have some current offerings, and you can check them out. Go to vikingmultifamily.com. That's vikingmultifamily.com. My team is there. We're going to present you a lot of information, and you want to get into our list and our Viking Investor Club. And whenever there's a new offering, we want to get in. Last, I would say 9 offerings we've oversold. We're subscribed where people wanted to get in, and at some point they sort of got on our wait list because we were so quick to subscribe. So if you're interested in multifamily, the key number 1 is to get education, and we would love to provide that for you. And number 2, let us help answer any of your questions you have. And if it makes sense, we're there for you. We'd love for you to consider us as one of your multifamily investment companies. And if there's other questions you have of other companies, we'd love to give you an objective answer on them as well. Because again, I invest in multiple companies all over the country, not just mine. And I'd love to be a resource for your investors.
Amazing, guys. Well, I'm going to go to Viking Multifamily here as soon as we wrap up here and get this all wrapped up, guys. But go to vikingmultifamily.com, get more information. And I feel like this type of thing is also the type of thing, this is what you want to share with friends and family and help them, find these opportunities, because these opportunities, most people don't know that they exist, right? They're told, for the old school, the slow lane, get that 401k or that IRA, let that money manager take it. They're going to take their 1 or 2%, annual fee on the money, which really reduces your returns. You might make a 7% return minus those fees. It might take 10 to 12 years to double your money, or you can be really smart and put it with Viking Capital and have the opportunity to double your money every 4 to 5 years with all the tax benefits, without the headache, and without having to worry what's happening with the market. And the lowest risk thing is affordable housing. There is nothing more lower risk, because everyone needs a place to stay. Everyone needs affordable housing. And by getting in with Viking Capital, you have that unique opportunity, guys. So go to vikingmultifamily.com. And Vic, give us the last word of the action items that people should take, maybe as they're going there, or maybe a few things they can do to get ready to be ready to pull the trigger.
Leo, I'm just sort of pumped and excited because I love the opportunity to be on your show. And number 2, just to talk to some of your listeners, guys, get clarity on your goals. Number 1, just really figure out, like, what's my financial number? What's my, excuse the French, but like some people call it the FU number. What's the number that will make you hit your goals in your life? And figure that out, and then figure out your methodology of how to achieve that, and then start taking action. You're not going to get that right. You're not going to get it right every single time, but you need to get started. And, if you're in your 30s and 40s, great. If you're in 50s and 60s, still not too late. Get going, and then find a few investment partners or consultants or leaders out there in the industry and work with them. And rinse and repeat. Don't get cute. Don't get creative. Once you find something that works, rinse and repeat over and over. And this is the road to the 1%. This is what the 1% do. And sometimes we forget all that. It's not difficult. It's just you have to follow a algorithm of success.
Amen, guys. Success leaves clues. Vic has a path and roadmap to success. Ask him for directions, and he's going to help you get there. Vic, thank you so much for being a guest on the podcast.
No, thanks, man. Leo, it's been awesome.
Are you looking for more 7-figure secrets, content, or even how you can launch your own recession-proof business? Then check out 7figures.com. That's the digit 7, FIGURES.com, where we share more videos, stories, strategies, funding solutions, entrepreneurial education, and even the secret business type that's recession-proof. Thank you for listening, and if you're finding value in our podcast, please give us a 5-star and invite others to join the club.